Early exchange, shaping policy, advancing development.
The big story for this segment is to look at the highlights of the IMF conference, which was held over the weekend, where you had policymakers globally. They assembled to talk about the fiscal policy and also the issue of debt globally. Now, what will be the impact of these decisions and the outcome of this conference on the global economy? Joining us for this segment, we have Sam Orovwuje, who is one of our in-house analysts. He joins us to provide insight into this conference. Glad to have you join us this morning.
Good morning, Femy. My
Good
pleasure
morning.
to be here.
Good to see you again, as usual.
Good morning, Blessing.
Good morning. Good to see
to
the
be-
latest version of you.
Thank you very much indeed.
We always get bigger and better.
Of course.
And so that's the hallmark.
My pleasure. Thank you.
All right, let's look at the conference that was held. You know, the IMF conference was held at University of Tokyo, Japan. What do you think is so significant about this conference, which was held over the weekend, and the decision to bring policymakers together to look at fiscal policies globally?
Yeah, I think the IMF, in conjunction with the Advanced Research Institute of University of Tokyo and one other University of Tokyo, brought the academia and policymaker and even some civil society advocate for a 2 days conference to deliberate on the core issues of fiscal policy and sovereign debt agenda among various countries, the growing public debt and the issues of fiscal policy has become a major challenge. And the projection is that between now and 2028, there's going to be a major issue if government and policymakers don't shape up in terms of the way they manage public debt. There's a likelihood that what happened in 2008, the collapse of the global financial system may likely occur if there's no fiscal discipline among countries, particularly the developing countries and emerging markets, whose debt portfolio has hit the rooftop. So therefore, there was a brainstorming session chaired by the Deputy Managing Director of the IMF within that university's ecosystem, where they discussed essentially how fiscal policy regimes can be improved upon and see how the growing debt profiles of countries can be managed in a way that we don't get into another problem in the next 4 years.
All right, looking at this conference, it's addressed concerns of many countries because a lot of countries are having very high debt level, not just one country or not just a continent. It's become a global concern. This actually was exacerbated by the pandemic, but this is post-pandemic level. We understand there's also the geopolitical tensions that is also affecting economic situations of various countries. But looking at the conference and the appeal and discourse on how countries can manage their debt level, what do you make of some countries with very, very high debt burdens and the ability to manage this debt? Let's begin from Africa.
I think the challenge with Africa is more of corruption and fiscal discipline among the countries in Africa, where you are overexposed, you borrow from the Bretton Woods institutions, and those monies are not properly deployed in terms of the common good or the public good. Therefore, the debt profile keep rising. When you look at inflation and look at interest rate within the countries in Africa, it shows that there's a problem where you're not able to manage public debt. Your inflation rate is not tackled. The rate of unemployment. All these are major challenge for the economic prosperity of Africa. So for the lessons African can take away from this 2 days conference that ended on the 8th of June is to see how they can deploy fiscal responsibility vis-a-vis monetary policy responsibility, the issue of corruption, borrowing right and tie those money to public infrastructure that will aid economic development and growth should be encouraged in Africa.
All right, still talking about Africa, what are the peculiarities you've observed about the pattern of public debt in Africa, and how do you curtail this kind of development? Of course, it's a global thing, but now making reference to Africa as a case study.
Even the US, China,
Even
the
Japan,
major players,
yes, they're also
they are battling with debt. But
Yeah.
our own peculiarity is different. When you go to those other countries, the level of infrastructure is okay. When you have social goods in terms of housing and public transportation, you can't make a comparison with what we see here. So the point here is that when most policymakers from government go into the international financial institutions to negotiate loans, once they get those loans in, there's a high level of corruption in terms of the way those loans are deployed for social infrastructure. So the point here is that once they go for negotiation, those loans must be tied to those infrastructure that will improve on the public good, as I mentioned earlier. Once the level of corruption is reduced in Africa, then the ratio of debt to GDP will reduce drastically. But even those institutions that provide this lending to these countries are not equally transparent in the way these loans are negotiated. So we need a commonality of interest in terms of how these loans are scheduled, the interest rate, and how the monitoring and the implementation and evaluation of those loans are done on time so that it does not impact negatively on the citizens of those countries whose taxes are used to pay for those loans. Once we have some transparent mechanism in Africa in particular, then the issue of these sovereign debts will be managed in a way that is beneficial to the people loaning the loan and the loanee, that's African country in the first instance.
You made a point about the difference in the situation between some countries that have a high debt level and others. For instance, some countries in Africa with very high debt profile, but nothing really there to show for it. And some other countries that are industrialized, very good infrastructure, but have a high debt profile. Now, to add to that, for instance, Japan has a debt profile of almost $10 trillion, but it is a really industrialized nation. The economy is doing well. In the quest for, or in the request for debt relief by some African countries, do you think it's going to hold sway, given the fact that while they're also heavily burdened with debt, some other countries are heavily burdened with debt, but some may be able to service their debt and then still develop even with that?
I think the issue for Africa in particular is that when we take these monies, we don't really deploy those money appropriately for what they are meant. If you do that to the level of infrastructure, public transportation system, then you're able to repay those loans as at when due. But this clamor for debt relief has always been on the lips of African government. But first and foremost, to what extent do they deploy those resources appropriately to work for their citizens? So for me, in particular, I don't really belong to the school of thought where they clamor for debt relief. You should use the money that you borrow appropriately and you're able to pay. And once those money is used appropriately, then you can reschedule your debt and make some concession for your borrowers who had given you money to extend even the payment period. That, again, will help. But when you make a comparison with the advanced economies, they deploy those resources appropriately and they are able to pay their debt. More often than not, they do debt rescheduling in a way that it will part on the citizens. So for African government, the transparent manner at which we deploy those resources must be looked into seriously so that we don't always go and beg for relief. On the other hand, we should find a way to reconfigure our economy by relying on production within Africa rather than taking the primary commodities outside where they are processed elsewhere and they come in as import and you pay at a higher distance. That will continue to devalue your local currency, which is not very good for the citizens.
I would love to make reference to, the statement made by the Deputy Managing Director of IMF while giving his opening remarks. I would love to quote him so that that can buttress our conversation. He said, today at 93% of GDP, global debt is 9 percentage points above pre-pandemic high. By 2029, it's projected to reach around 100% of GDP. How do you react to that? Do we have cause to worry?
Yeah, that's very alarming, and I think the call is for prudent management of public finance. Most bureaucrats, particularly in the developing country, are laced with high level of corruption. And when you borrow money, when you look at the outcome of those money borrowed vis-a-vis the volume of debt and how those debts has impacted on the economy is so small to the extent that most states, even within federation, highly indebted, internal and external debt profile is so high. Therefore, it's alarming. And this meeting is to address the core issue of fiscal responsibility within a country so that they can be able to manage public fund more efficiently. And once you're able to manage public fund more efficiently, this debt overhang that is bedeviling a lot of nations within the Committee of Nations will be reduced drastically. So, but it's alarming that debt to GDP ratio is going to go as high as over 170% by 2028, 2029. These are worrisome trend, and the IMF has a responsibility to call for this conference and find a way, even in their own monitoring mechanism, put in place to monitor loans that they give to countries. And this will help to see how we can make policymakers in the public sector to be able to manage those resources optimally for the common good.
Now, one of the issues that was discussed at that conference was debt sustainability, talking about countries having plans to manage debt level while not hindering economic growth. Is that possible to achieve, given that some countries are just managing to get by and having budget deficits?
I think there's a nexus between fiscal policy discipline and debt sustainability. What it means is that there's nothing wrong in borrowing. Once you borrow, you use those money for the things you borrow those money for. But more often than not, some of these funds are diverted into other non-economic projects, particularly for political expediency, which make sustaining or paying for the debt become very difficult. So sustainability means once you have some level of discipline in terms of your taxation, responsibility of government, the bureaucracy that is overbloated, and once you're able to regulate, you right-size the public sector workforce, then you're able to pay your debt as at when due, and you're able to sustain those repayments without impairing economic growth and development. So you must strike a balance between fiscal responsibility and debt sustainability. Once you're able to manage that nexus, then it becomes easy to sustain your debt repayment.
Just like you said earlier, even the so-called big boys, if I may borrow that word, are not even left out of the web. I would like to make reference to the second part of his speech where he said, at the national levels, figures are higher. Even in the US, China, and Japan, respectively, debt to GDP ratio forecast to reach 133%, 106%, 251% by 2028. That's huge. So if the big boys, the likes of US, Japan, China, are not left out of the woods, what's that? Isn't that a sign of caution for everyone globally?
Yes, indeed. But the difference between those overburdened developed country is that they are able to service their debt as at when due, even when the borrowing profile is so high. There's a repayment policy in place that is sustainable, unlike the developing world where most of those monies have gone into private pockets. And to that extent, the impact in terms of social infrastructure, in terms of economic development and growth, it does not really impact. Therefore, more often than not, the emerging economies are always demanding for debt cancellation, which, in my view, is not sustainable. So if you collect debt, once you put those debts in place, you'll be able to use them for the specific project for which you took those monies from those lending institutions. But when you use public funds in a wasteful manner, then you have a challenge in sustaining your debt profile. So those big boys, as you call them, the US, China, Japan, and all that, they have a threshold at which they can make their payment year on year in terms of servicing their debts. While our case is that they come in with another policy regime to tighten our belt. You're removing subsidy for electricity in Nigeria, for example. You're removing subsidies on petroleum products. Whereas these advanced societies still have a big dose of subsidy regime that impact positively on their citizens.
All right, let's look at geopolitical tensions. How does the situation impact the debt level of various countries, particularly those that are directly affected by the tensions?
I think the geopolitical tension is essentially between US and China on one hand, and some other country, particularly the European Union. That tension will always be there. China has been accused of producing and bringing cheap products, particularly electronic and automobile, into the market. But I think that tension is more of politics. But as long as China is able to sustain bringing cheap products into the market, we put the US and the European Union on their toes in terms of how they can change their manufacturing practices and how they service the international market, particularly the way they do their trade relationship with other countries. So by and large, that tension will continue to be there because in the international politics, tensions, geopolitical tensions, are a continuum that will always be there. But nations, at the end of the day, will have a way to manage their differences, and we, to some extent, can maintain what we call international trade equilibrium from time to time.
Now, my question actually borders on, in terms of spending, in terms of attending to issues like war coming from geopolitical tensions, how does it affect a country's debt level at the end of the day?
Of course, it will impact negatively on the citizen, where your spending that were meant to improve on the common good push into your support to pursue wars that are not impactful to the citizens. So that will have negative impact. If you look at the defense spending of the United States of America, particularly its spending regime to the war in Ukraine, its support for Israel-Palestinian war, these have negative impact on the citizen. So that will negatively impact even the ability to pay their debt. So I'm sure they will reschedule some of their debt as well because they are spending to sectors that are not really very critical to the citizens. So that will impact negatively, as you rightly mentioned.
Now, one of the highlights of that conference is for nations to commit to debt reduction, especially in Africa. Now, how do you think government or nations can sustain this commitment to debt reduction?
Number one, I think for Africa, number one, the level of corruption must be reduced. That's another way you can...
And that is if corruption is not fighting back?
Corruption will always fight back, but when you put a regulatory framework in place, they are able to minimize corruption. Corruption is a universal concept. There's nowhere in the world you don't find corruption. But then the institutions are able to bring to bear those who have infraction into fraud and some other things. And those who put their hands in the cookie jar will be punished drastically. But here, I think we celebrate people that has put their hand in the cookie jar. That's number one. Number two, fiscal responsibility. To what extent is the government itself disciplined in terms of the way they spend money? So there are a lot of wastage in the public sector institution in Africa. So they need to find a way to block those leakages. That will help. Two, subnational governments that equally borrow from institutions outside the country must find a way to scrutinize their spending. Rather than borrowing for political expediency, they should only borrow for critical sector development projects that will impact on the citizen, that will increase on the economic growth and economic prosperity, and people have some disposable income to spend. So once you're able to look at those three essential elements, I think that will help a great deal in reducing debt profile, particularly in Africa.
Let's look at certain challenges in some African countries that have led to the recourse to borrowing. For instance, in Nigeria, the insurgency have been reported to increase the spending on the military budget for defense, weapons, and other things, which increases the budget deficits, leading to borrowing to cover up that gap. Are there measures that can be taken to reduce some of the challenges that African countries are dealing with, which makes them borrow even more? For instance, the insecurity challenge in Nigeria.
Yes, indeed. I think the challenge here is that if you look at the overlapping drivers of conflict in Africa, the issue of good governance, political instability, food security, education, they are a major driver to conflict. So how do you deal with those issues? Number one, a fundamental investment on critical sector like education is uppermost. So if you give education to people, that will improve on their socioeconomic fortune. Therefore, it will have negative impact on those who have propensity to go into conflict. The point I'm trying to make here is that if you address the fundamentals, therefore your spending on defense, on military hardware, procurement, vis-a-vis fighting insecurity will be reduced minimally, because your level of education will improve on the multidimensional poverty of over 90 million Nigeria that we currently have in terms of the statistics. These are very grievous issues that will impact negatively on the amount of money that you spend on your defense budget. So we need to improve the baseline in terms of education, in terms of food security. Once we're able to address that, then the money you spend for security will be reduced, because you're not only fighting external aggression, but you're fighting insurgents within your country, banditry, kidnapping, which I think is not healthy for economic growth and development.
Now, let's revisit the debate on the cost of governance. There are people who argue that, looking at the cost of governance also add to the debt burden, for nations. For instance, a country like Nigeria that practices presidential system of government, which some is widely adjudged to be quite expensive. What should nations do to start looking inward to cut the cost of governance? And do they have the political will to do that? And what will be the impact of that on debt burden?
If they don't have the political will, it is the responsibility of citizens to push their agenda so that that political will can be activated. So first and foremost, let's take Nigeria, for example. I think the presidential system is very expensive in Nigeria. Looking at the structure of government, from the federal, state to local government, there's been increasing agitation that we should return to the parliamentary system of governance. I don't share that view personally. The presidential governance is still okay, though expensive. So what we need to tinker with is the size of representation at state, local government, and at the federal level. Then when you look at the public sector, including the institutions of governance, particularly at the federal level, I think the size of governance is so high. There's a challenge and there's an issue of over 9 trillion if you are to pay the current proposal that is on the table by the organized labor movement. So if that kind of money is used for recurrent expenditure, particularly for paying the workforce, then how much should be left for capital development? So in that regard, therefore, what is key is reduction in the size of the institutions that represent the federal, state, and the local government. But those who canvass for parliamentary may have their point, but then if we must move in that direction, then we need to tinker with the Constitution. But I think the way the current National Assembly is constituted, to have a two-thirds majority, to be able to change to a parliamentary system, will be a difficult call. The only thing that can happen, if the citizen can activate the recall procedure of recalling their senators and their rep member, again, which is difficult the way we're configured. But the size of government can be reduced so that we can reduce debt to GDP ratio, which is alarming and provokingly worrisome the way it is.
So when countries don't take it easy with borrowing, what could be the likely implications of this?
I think the point is that why borrowing is essential. Country must manage their resources in a way that they can balance their deficit budget at the end of the day. In that regard, what the IMF is talking about is to what extent can you sustain the debt that you take from some of these institutions across the world. Therefore, for you to be able to sustain that debt, you have some element of how you're able to balance your budget, improve on your economic fortune or economic opportunities at home so that you don't recourse to borrowing. But then there are certain infrastructure that your budget may not be able to sustain. Then you get into borrowing. But when you borrow, some economic activity within your national boundary should be able to sustain the payment of that loan which you have taken from the international institution, first and foremost. But the challenge, most countries are not able to pay. So even the lending institution, as it were, will find it difficult to be able to give money out when those money that has been given out cannot be recovered. You can akin that to a commercial bank where depositors have put their money, and when depositors request for their money at will, which banking is all about, are not able to get their money. So there will be a run on the lending institutions. And that's why IMF, which is a major international borrower, is taking the lead with the University of Tokyo to provide imperative that can help countries navigate the way in terms of how they can sustain their debt portfolio.
Let me do a follow-up to the question asked earlier by Blessing. Earlier we were talking about the big boys. Now, these are the large economies. You have the US, China, Japan, and the rest of them who are battling with rising debt profile. What will be the implication of these on global economy if it's not checkmated?
No, I think essentially is what we have been speaking to. What it is that when there's a large portfolio of debt from the lending institutions, in this case, IMF in particular, the resource that is available for borrowing will be depleted. In that regard, most countries, when they will need the loan to support their deficit financing in terms of national budget, the money will not be available. Then it becomes very difficult to be able to sustain economic growth. Then there will be problem, and there's a likelihood that the financial crisis that the world experienced in 2008 or thereabout is likely to come up if they don't checkmate this debt profile by 2028 to 2029. So the issue that we discussed is to see how country can prudently manage their fiscal responsibility, and we have a Fiscal Responsibility Act in Nigeria. To what extent do agencies, Department of Government, respect the provisions in terms of how they can sustain the economy? So whether China, whether the United States of America, whether Africa, whether it's Nigeria, we need to take caution in the way we manage our debt and the way we borrow. And because once you borrow, that's going to deplete your external reserve when at the end of the day you are paying. Even currently we say the ratio of debt servicing to capital expenditure in Nigeria is so small. So these are the challenge. Then development and the challenge for citizens in terms of the economic well-being will be challenged.
Earlier, you mentioned countries increasing economic opportunities and fortunes. How can this be achieved in a country like Nigeria, for instance, and then Africa?
Discipline, inward looking in terms of economic development, diversification of the economy, rather than depending essentially on the monoproduct that has sustained Nigeria since 1958 after the produce, which was a major sustainer of the regional government, were laid to rest, figuratively speaking. But then, when you do high level of importation in a country of over 270 million people, is a major challenge. So we must look inward in terms of how we can develop local industry. Those industry that are currently operating can do a kind of backward integration where they can source commodities, alternative raw material, like the breweries of this world can find a way to get their brewing raw material from corn or maize products. We can develop ethanol and other elements that can reduce on over-dependence on import. If we're able to do this kind of inward and critical thinking, particularly good governance, reduction in the level of corruption, then the wastage in the public sector in particular, we have to address some of these issues that we'll be talking about earlier.
All right, let's wrap up with these. How do we checkmate this trend in some countries? I think most importantly in Africa, where countries obtain loan, a few years down the line, they can't repay the loans, and they're asking for pardon or clemency. How do we checkmate that? And it will look like African countries are going back to IMF to beg for loans.
I think even the Bretton Woods institutions themselves has a problem, because they always lure African leaders to collect the loans, and when they come here they stay in the best hotels, drinking coffee and tea, and at the end of the day, the overhang is on citizens of the country. Two, we must recalibrate our national budget in terms of revenue vis-a-vis capital expenditure. This over-reliance on borrowing is not sustainable for African development. So leaders at the continental level must see how they can reconfigure or recalibrate the process of how we manage our national budget, see how we can leverage within the national boundary on how we can sustain local debt portfolios rather than over-reliance on these Bretton Woods institutions that have held us down in the last 60-something years after independence in Africa. And the leadership must equally re-engineer their mind that whatever comes from Beijing, Washington, London, and some of these international buccaneers, permit my word, in the sense that they are always giving us the way we should run. After 64 years of independence, we should be able to win ourselves from this colonial mentality that has become a developmental challenge in terms of debt overhang, too much debt without redevelopment, and this money is going to private pockets.
So what implication would this situation have on businesses when countries are heavily burdened with debt? The businesses operating within these economies, what's their fate? What happens to them?
All right. There will be a high level of borrowing as well locally. When the interest regimes are so high for manufacturing, small and medium enterprises, those businesses will not be sustainable. Then they will go under, then the rate of unemployment will increase, which has negative impact on disposable income. So the national economies will suffer as well, because once you are not able to reflect your economy in terms of improving on the demand of goods and services which are produced locally, then the inventory in the warehouse cannot come out and they will not be sold. Therefore, the country itself will not even earn money from taxation, because when people have disposable income, they are able to make purchases, demand, and once demands are there, then the factories will sell and make profit. Then people are paid reasonable or living wages, as Femy called it in one of our conversations.
All right, thank you very much, Samaruji, for speaking to the issues on the table today. In case you joined the conversation very late, well, let's just do a recap for you. We're looking at the IMF conference that centered on fiscal policy and sovereign debt agenda. And now the IMF has been warning countries to do what they can to reduce their debt profile because of how alarming it has become. And Samaruji has done justice to it, also recommending to countries ways by which they can actually reduce their debt burden and even recourse to borrowing for countries like Nigeria, looking inward, as he has said, for where the economic opportunities lie and how economic fortunes can be gotten. All right, we'll hope that Nigeria and so many other countries that have a high debt profile will be able to manage it and even reduce it. I think the example sometimes that is often given that Nigeria is not the only country owing. You have the big boys, in Femi's words, China, the US, and even Japan owing. It should not be a yardstick to borrow even more. Where borrowing can be done without, by all means, it should be. Thank you again, Samaruji, for being with us on the show.
My pleasure. Blessing.
That's a wrap. Many thanks for watching. The show returns tomorrow, 8 a.m. West African time. I am Blessing AJ. I'll always ask you to do one thing, and that is stay with SOUQ News the entire day.
And from me to you, as you start your week, remember that everything big in life starts from little. Even from that, your little resources, learn to manage it so that the big things you're waiting can also be managed well. Whatever opportunity you have, you can achieve your big dreams in a little way. Don't forget, early exchange returns tomorrow. It will always get bigger and better. And you can also do a catch-up on our YouTube channel at SOUQ News TV. I am Femy Ayodele. I'll see you tomorrow.
Early exchange, shaping policy, advancing development.